Welcome back. Hope you're having a good morning. For starters, the SGX Nifty suggesting a bit of red on the screen, but that's been the trend, right? Last few days have been a little bit muddled. Overnight, the Qs as well, not giving any conclusive direction, owing to that debt ceiling still needs to be raised, uncertainty on rate hikes as well. But let's see how it goes. Well, plenty of stocks to discuss, though. Dipan Mehta, director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Dipan, let's talk about LIC. You know, one of those bombed out IPOs that came sharply low in comparison to the IPO price. But my colleague Surbhi says the numbers look good. At these sort of prices, will you look at it, given that valuations are more or less attractive now?
Good morning, Nigel, and thank you for having me on your show. Yes, I did hear the report which was given by Surbhi. But I think the concern here is that the embedded value that rose just by 7.53%. And that is much lower than what the embedded value growth we are seeing consistently in the private sector insurance companies. It is usually in the high teens, sometimes even crosses 20%. And, tracking these insurance companies is very difficult, understanding them even more so. So I think one simple matrix to follow is the embedded value and the price to embedded value. And while I think LIC is very attractive on that count, but the underlying growth is extremely slow over there. And intuitively, I do feel that they may have lost market share. So if you're a value player, I think certainly LIC, checks those boxes for you. But on the whole, we prefer to buy growth companies, and the real growth in the insurance sector is coming through the private insurance companies, where we have seen that they've declared very good numbers, and they continue to remain secular growth stories.
Right. Dipan, hi, good morning. Any thoughts on Bharat Electronics? I mean, I think that is one name where there are some post-results. Street is lifting estimates for FY24 between 5 and 10%. And earnings at the end of the day drive, prices, and upgrades drive prices higher. What's your sense? Do you like the name?
Yeah, good morning, Prashant. I think more importantly, earnings visibility. I think at a time when investors are looking at so much of uncertainty around global markets and commodity prices, and now even we are seeing some sort of a softer demand in the rural sector, especially when it comes to retail. I think that when you want certainty, then you need to go to the defense stocks in India. They have a clear edge because of their PSU status. And this entire indigenization program now is a reality. And it is moving very, very rapidly. So the opportunities for defense companies is growing by the day. And although valuations were not as cheap as they were maybe 1 or 2 years ago or so, but I think that even if P multiples are maintained at these levels, just because of the general increase in earnings per share, which could be in the range of 15 to 20% or so, those are the kind of returns that you can expect. And I think that would mean that these stocks are outperformers. So positive on Bharat Electronics purely on account of the earning visibility. And I would say reasonable valuations as well.
Dipan, any thoughts on Nykaa? The revenues numbers look good, 34% higher. There was an expansion in the EBITDA margin. And while the beauty and personal care segment is seeing very strong growth, I think their market share as well has gone up to close to about 28%, according to some estimates last year. So market share is higher, but their fashion business is still struggling on account of high competition. And the company is investing to grow that fashion business. Do you think that could be a drag on Nykaa?
Good morning, Rima. It is a drag on Nykaa. And I think that you're right. The competition is far more severe when it comes to fashion. There are many more players. And the kind of edge that Nykaa has in the BPC business, the beauty and personal care product, that is not getting translated into the fashion product. In the BPC business, they had a first mover advantage. They did many innovative marketing strategies, product presentation, and the entire platform attracted a lot of consumers as well as the companies which offer these BPC products. But that's not the case. That advantage is not there in the fashion and retail, the fashion business. So it's going to be a bit of a drag. I think that if you're invested in Nykaa as we are, as a measure of disclosure, you kind of remain invested. But nothing in the numbers that I saw today kind of encouraged me to increase my investment or recommend a fresh investment in Nykaa. On the whole, I think company is following through on its business plan to make it self-profitable.
Okay, so stay invested if you own it, but there is no reason to add to your holding right now or buy at current levels, just purely based on the Q4 numbers. But Dipan, you would want to listen to the management commentary. We've got an interaction scheduled at 9:40. But